What's up, everyone? Welcome to the Sunday night charting. So we're going to start with cotton futures on TradingView first before I switch over to Webull to chart the actual stocks that we're going to look at. Just like I talk about every time when we look at stuff that I chart for the first time, I'm not familiar with this. This is my first time looking at it. So I'm only going to talk about the main the main sections that I can see, the main zones. I don't want to get too heavy into the actual perception of where it could bounce, where it could move. I don't know where the highlight is on this. I want to use TradingView. Let's do this. So when looking at this for the first time for me, I'm obviously right now on the weekly chart because I wanted to see an overall perspective as to why and where it is currently with the price action. Every time I chart something I've never looked at, and half the time, even stuff that I have been looking at, I will always start on the daily at the minimum or the weekly or monthly just to get an overall perspective on basically the rejects, the bounces based off the weekly candles or the daily candles. I'm focused on the major zones so that once I have a visual picture of price action above and below current price action, I can work my way down to the 4 hour, the 2 hour, the 1 hour, and so on. So just starting with the weekly, I'm only going to put 2 or 3 main lines that I see. I don't want to make it too cluttered only because this isn't something I feel other people are going to be watching pretty heavy. 1 second. I don't connect the mute people. But yeah, so basically when I start on the weekly, I'm focused on the main zone. So for the resistance, the main thing that I see, it's a rough area between 92 a share and about 94 to 95. So anywhere in this main area is going to be a heavy rejection on a push. Obviously the price action is around 86 and I'm looking at 93 to 95. When I'm looking for a main support now, I don't want to look at something that's heavily spread out below or above the price action with the zones. So when I'm looking at this, who's that who's talking? There we go. So when I'm focused on this with the support, I'm trying to find a rough area of massive either rejects when price action contested upside and drop back down, or when price action is above now and it pulls back to support. And if you look at the chart, a lot of rejections happened where I'm going to put a support for current price action. Since we're around 86, there's a lot of rejections, roughly around $80 to $82 a share. And that's going to be a support for the current price action. So when doing that, if I put a line roughly around here, I'm going to change the color just so it doesn't get confused with the other orange one. I'm focused on overall zones that rejected, not a pinpoint. The idea of 82.74, 81.93, I'm not focused on to the decimal. I just want a line on the larger frames to have a visual idea when I switch to the 4 hour and lower when I can't see that far back. So now that we have the 2 major zones, I can focus on the 4 hour and just use the current consolidation zone that this is in. The first thing I see when I pull up the 4 hour is kind of a little trend forming right here. So we have a nice trend going with higher lows. We're not hitting higher highs yet. So we also are kind of breaking down into lower highs that are trying to break out. We're currently above that, trying to push like we have been. The main support is going to be roughly, I'd say 82. And then I have a main resistance at 92 to 95, like I said earlier. But now that I'm on the 4 hour, I want to add in a level around this area right here. I'm going to make this color, let's go with yellow. So the reason I put this yellow one here, when I zoom in, I want to extend this so it's a little bit easier to see. We're focused on, I wish I could find the square highlight on this. No, it's not it either. There it is. Here we go. So I'm looking at all these rejects off of the 4 hour right now. I'm not really focused on all the stuff in here because that's the current price action. We're trying to break out. We're rejecting back down. If we're looking at the main rejection in this consolidation, we're focused roughly around this area right here where this highlight is. where the rectangle highlight is. If we're looking for a slight pullback outside, well, higher than the 81 to 82 a share that I have for support from the weekly chart, I'd be looking at roughly 84 to $85 for a closer support if you're focused on that area. Recently, there's a lot of rejections when price action was below. Now that price action is above, a pullback would obviously bounce back up off of support now, since that's a resistance to support flip based off the zones. I do not want to get too into detail with this because we have a lot of other stuff to cover. I don't know. I'm trying. The person that recommended the cotton futures, are you in here right now? I want to see if he and or she. Because when trading stuff with futures, obviously it moves 24/7. I don't know if the cotton futures does, but currently where it's at, I would not be interested in kind of trying to guess which way it's going to go. We're at a nice area where it's going to draw down and it could push back up, obviously. So I don't want to say what I think could happen because it's in a very tight spot where it's at right now. It had a massive push over the last few days. It could pull back, so it's not too certain what's going to happen. And let me know if you guys see this switch over to Webull. I'm pretty sure the screen share should show this as well. So you guys see different charts now. I just want one person to say yes or no. The American Airlines chart, does anyone?
Yeah.
Okay. Thank you. Mo, you said how to draw supply and demand. So, supply and demand is the same thing as like support and resistance, the same terminology. I'm going to break down how I do that, and I'll try to keep it simple so it's easy to comprehend. And I'm going to actually delete most of these lines that I already have, and we'll just start from scratch with American Airlines. And I may do the same thing with Apple. And I'll just basically break down the first few stocks, how I go into detail as to how I find my levels on basically a broader perspective of how I do it. And then as we work through past the first 3 or 4, I'll just basically chart them. And if you guys have questions as I do it, just speak up or you can type it if you want to. So when starting with American Airlines right here, the first thing that I like to look for is obviously I'm on the daily or the weekly. If I switch to the weekly, you should be able to see these higher lows forming. We're making a higher lows off trends. We kept having this bearish formation on the downside. Lower lows, lower lows, lower lows. Once we finally broke those trends, we had the final low right here where I put the white highlight. Then we started to make trends reversed in the opposite direction in a bullish standpoint, a higher low, and it's trying to push back up at the moment right now. So just going off the weekly, I'm going to switch to the daily now. So you see the bigger perspective now, since we have more candles. When you're on the weekly, you only see 1 candle for every 5 on the daily. So now we have more range to work with off of candlesticks that formed. The trends are the first thing I always look for because I want to know what kind of trend that we're in on a specific stock, whether it's bearish or bullish. That's the first indication I want to know, because if we have a pullback on American Airlines, logically going off of historical price action, we should bounce at a higher low above the previous, which was roughly $12.80 a share. So you have to realize pullback, if it holds the trends of the bullish that are forming, it will make a higher low. There's no determining what price it could be. It's just the idea of if the pattern plays out off the trends. Even on SPY, yeah. So supply, demand, support, resistance, zones, consolidation, trend lines, patterns. It's all universal with anything you chart. This can literally be used on like the S&P futures. You can use it for crypto too. Charting is all the same. It's just the idea that you have to understand with how you won't know what's going to work 100% of the time. Nothing is guaranteed to work when you start a position. No trends or patterns are guaranteed to form and work the way they are textbook material wise. And that's why you want to have a low risk, high reward when you make plays. You want to wait for the stock to align to a setup or pattern that you are very familiar with, and historically you have a higher hit rate on that specifically. Because what I like to do when I find these trend reversals, the last time I alerted American Airlines, I had us play it off the bounce right here. We had a push up, we pulled back, we had a double bottom, and that's when I entered this for everyone else to follow in the signal section in the Discord. and we had a massive push on the next 2 days of that contract. I think the American airline contract went roughly, I think 300% at the high, and it was almost a month and a half out expiration time. So it wasn't nothing the week of, following week. It was a massive time played for a contract. So after I find whether it's bearish or bullish, at that point, I look for heavy zones, whether it's support, resistance, or maybe a pattern formation is coming in. The main thing I see with American Airlines, I'm looking for massive candles, either the daily, the 4-hour, the weekly, where they reject or bounce in the same area. This is what I'm looking for a zone. So when looking at American Airlines, you have multiple spots you can use to just do anything, basically. I'm going to put like a few in here first, just to give you an idea that you don't have to chart every single double top, every 2 candles that align for a reject or a bounce. If you look where I have the white highlight right now, we had a lot of bounces here. Yes, we wicked down, but that's not what you want to focus on. It's the idea of the zone, not a pinpoint. I'm not like focused on, oh, I want to catch this if it pulls back to like 15.35, 15.42. I'm just focused on the overall area, whether it's a dollar increment, 50-cent increment from low to high. I just want to know where the zones are so that when the current price action reaches that, I'm not freaking out about why is it not going up? Why is it rejecting? Everything aligns if you just have it charted for you when it happens. So when looking at American Airlines, massive candle rejects on the daily here for the resistance. Yes, it broke out in the middle right here, but you have to focus on the fact of when we broke out on the daily, we did not hold or push higher. Right away, we fell right back inside after about 3 days of consolidation, and if you want to call it a bull flag, but we broke above on a massive green candle, held for about 3 reds, and then the very next day we gapped down underneath. Once we broke underneath this, we couldn't break above and hold. So now that we're finally in that proportion area above in the current time frames right here, I'm going to switch to the 4-hour. Now we can see it would reject, 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 reject. If it broke above, but it pulled back heavy, we're currently back above it, and we're starting to consolidate above that zone. So if we have a pullback, will buyers be present to keep that support strength there and not historically break like it has been? If American Airlines can hold that zone between roughly 1450 and 1460 a share, this could have a next leg up, but that's when you have to look at the resistance now. So I'm going to switch back to the daily time frame. Notice the reject we had right here. We had that massive breakout and we pulled back inside. So when I use that as a resistance, we have the support underneath. We couldn't break out completely whenever we contested. The first time we did break it, we held above for about 3 days, came right back down. When we came back down underneath this resistance was rejecting every time until we broke back above again. So when using this area right here, where exactly do you put a line? Where is that resistance to the whatever price per share? That's when you have to focus on, okay, so where am I looking at for the current price action? Would pilot shortage help make an informed decision? So I usually don't use news with charting, but there could be, I mean, news always plays out with anything. It could be good news and the stock goes down. It could be bad news, but the stock goes up. So I try not to use news to my information wise with plays unless it's like so-and-so raised the price per share of this stock by this much. Like before it was 16 a share, now it's 18 a share. I watch for those. I watch for like huge news releases, but something with like shortages, it doesn't usually affect the stock because half of those news releases are played in already with the charting. Like a lot of these corporations, they know ahead of time before the retail gets the news released by the news outlets. So a lot of the time the chart's not going to react because it's already played in with like the big money that plays the stocks. I personally would say news is priced in, but it also depends on what news. Something like a world crisis, a huge natural disaster, that stuff isn't predictable. So it's not like people knew about that beforehand. So it just depends on what it is and how it comes out at the time of the day, I would say. I don't want to get too big into the news segment, but I'm very heavy on the idea of news is already priced in. It just depends on the severity of what it is and how much it could affect the specific stock or the overall market as a whole. So this area right here, I gotta start staying on topic. When I talk, I can't stop sometimes. So this breakout we had, using this zone, like I said before, I'm not looking at a pinpoint to the decimal. I just want an idea area where this had happened. So I'm going to make this a little bit wider real quick. I'm going to zoom out. So this area right here, where we had with the break above, the one below, and we held and we came right back underneath the one below. If I use this zone, I'm literally looking at this as, okay, if we push up to this height in the current price action, this could reject again. Because historically, when we look at these areas, we couldn't break higher. We broke a little bit high, but we came back down. So this whole zone is heavy selling pressure. Anywhere between about $15 a share to roughly $15.50 is heavy rejections. Going back before, when price action was above that, it would hold its support until it broke through. Ever since it broke through, it's never been able to hold above that $15.50 a share area. And when it does hold, it comes right back down. So going to the current price action, look where we are at that resistance now. We're pushing up, holding the support. I'm going to make this blue, so it, like blue is support, and I'll make the white stay as resistance. We're holding above the support, but we're also right now contesting the historical zone that rejects massively. So American Airlines is currently in a tough situation. When I'm looking at it from this perspective, if I'm on the larger frames, I see a bigger picture now. A lot of people that are just on the 5-minute, the 30-minute, if you're on the 15-minute, this looks extremely strong right now. Okay, we're approaching a double top. This could break out. I want to get calls and just hope it keeps going. If you go to the larger frames, though, you can see that we're at a rejection area. It's not a guarantee this is going to break out on the upside. So I would not be focused on getting calls at this point. I would just be watching it. I don't want to force a play because the entry for calls was off that trend I showed you on the daily. I'm always trying to find the best possible entry and add time to my plays. If you want to play the day of, like a day trade, you have to check the smaller frames, but that's when you have to basically put zones in a more closer area to the current price action. Which broker do you use? So I chart on Webull. I trade off of Interactive Broker, Thinkorswim, and then I have a Roth IRA with Webull. But all my charting is on Webull. That's where I started, and I've always done it because it's very mobile friendly and it's also very easy for desktop as well. So now I'm going to speak on how would I play this if it breaks on the upside. When this breaks on the upside, I'm looking for a recontest of this zone. I'm not focused on, okay, we broke out, I have to buy calls now. If it breaks out, I want to see it hold above for a little bit. I want to see it break out, kind of like do a little whatever, and then pull back and hold this as support now. This is going to be my entry. Because then if it fails here, I'm selling on the break. But if it holds, that's the best possible entry, and the contracts are going to be a lot cheaper compared to where they would be if I would have bought the breakout and it pulls back and then continues to go higher. I want the highest possible reward with the lowest risk. So when a resistance breaks on the upside, see if it can hold support when the price action comes back down towards it, and then vice versa. If a stock breaks support on the downside, wait for it to push back up to that now resistance and play puts to see if it rejects that. I'm always playing support to resistance flips or resistance to support flips. Does anyone have any quick questions over what I just talked about? I'm going to switch over to Apple and basically talk about this in the same depth that I just did. But as I go through the first few, I'm not going to talk as much. I'm just going to basically post my levels and let you guys ask questions, because we have like, I think 18 things to go through, which is I think the most we've had. But the overall, when I chart, I'm focused on the daily and the weekly just to get an overall perspective. Where is the stock currently based off years ago? I'm not focused on only like a week or two in advance. Like, this is not enough for me. If I'm on the 1 hour, this is not enough for me. I want to see the picture first and then break it down into increments. That's how I like to chart, and I know a lot of people do the same thing as well. It's just mostly, is this something that you can correlate into your personal trading style? Is it recognizable that you can do this and not be confused with what you put in? Because when I see stuff like this on a bigger picture, when I go to the smaller frames, half the time I don't even need any of these levels here, because I just know from either playing the stock so much or just charting this and having that visual picture in my head now, I know where this is supposed to bounce, where it's supposed to reject. I just get the idea. So yeah, this is American Airlines, and I'm gonna just briefly, like, last thing before I switch over, heavy support, heavy resistance. The main thing that I want you guys to focus on, obviously we have a main support at around $14.50 a share. I'll make that blue color. We are currently rejecting like the first PT for resistance, I would say, at around $15 a share. And then if we break the $15.50 a share, American Airlines has a chance to run up and fill that gap to the top side of where the previous breakout was, around this area right here. This would be the gap fill if we can break that 1550 area. And if we do fill that, it'd be roughly $16.50 a share. That's almost $1 push for American Airlines. So I'm switching over to Apple now, and I'm gonna take away a few of these lines since we pushed higher over the week. So obviously, if you guys don't know, Apple is literally, this is all biased. Apple is going to break all-time highs this week, more than likely, if not pre-market before market even opens on Monday. So Apple has been making a move. Obviously, tech is hot. Microsoft, Nvidia, AMD, Google, Amazon, the main stocks and companies in the S&P have been pushing, and Apple is literally at that point of breaking all-time highs. If I switch to the 4-hour, we can't see the actual price action back here, but the all-time high for Apple is around $181.80 a share. Current price action is roughly $181.11. So here is my personal advice on stocks that are approaching all-time highs. I like to use the highest price the stock has ever been and use that as the only level, basically. If I'm looking for a pullback to buy calls, I would look at the biggest area, either when I'm looking at the all-time high and then the previous lower high off the all-time high. Do you want to wait for a pullback to the second high, which is the lower high to the all-time high? Or do you just want to go off, oh, if we consolidate at the all-time highs, I just want to get calls and I want to just hope, or I want to just see if Apple can break the all-time high. If it breaks, it's going to keep running. A lot of people think that way, so they just buy a call and just hold it. I want to enter where it's the cheapest that I can possibly get it, where the risk is a lot lower. If you buy at the all-time high or even at the main resistance of a stock, you're basically just telling yourself it has to go, or pick up puts at all-time high. So I'm not very big on getting puts, only because there's no level above the all-time high as to when you should cut the play. If it breaks the all-time high, what's the level that you're going to sell your puts at? A lot of people are just going to say, oh, well, if it breaks the all-time high, I'll just sell right away. Well, what if the stock only breaks above Apple's all-time high by 50 cents and it just tanks back down to 170 a share? So I never try and play puts on all-time highs, a main resistance zone. I want to see it reject and then form that bearish trend of lower highs off a reject. So it's kind of like when Apple hit, let me switch to the 4-hour real quick. So it's kind of like in this area right here. Imagine this is Apple's all-time high from 2 years ago. It's just recontesting, double top, whatever you want to call it. The all-time high breaks. People are thinking, I got to get calls. I got to swing this. I have to get longs. And then Apple comes right back down. I'm not saying that's going to happen if the all-time high breaks, but this is like my fear of buying breakouts on stocks. I don't want to buy the breakout and then get caught holding and then it rejects and comes back down. Because then at this point, my mindset would be, well, I just want to hold this because what if it bounces again? Like, it hasn't really dropped too much that it could keep going. I want to see if it can revive, if it can just like pull back a little bit and push back upside. I'm interested in buying the breakout and the recontest on the pullback, which would be roughly this area, which was a fail. But if Apple came down to that area, this right here is a massive support based off the consolidation right here, this blue highlight. Apple had an amazing dip buy entry right here to buy calls and swing it with time. So with Apple approaching the all-time high, there's no levels for resistance above, obviously. Like if you do the fib levels, you can find something. I don't use fibs, so I don't know how to do it, and I don't know how to calculate what the actual price action would be. But when looking for a pullback, you can use a few days ago where it double topped in the day, basically hit the same area the day before. So you can use a support around this area right here, which if I put a line there, that's roughly around about $179.30. I'm going to make this purple. So if I switch back to the daily now, look where that purple line is. It's slightly above the daily right here. If I take away this highlight, slightly above here. And if we go back to the all-time high, it's practically the rejects before the all-time high hit, then pulled back right away. So you can use the zones on the current price action to find something, because this area right here is a nice support. If it rejected this heavy on Apple before the breakout happened, and then it had a massive pullback on Friday that held, this could be a nice support if Apple has one last dip before that all-time high breaks on the upside. So I'm not saying this is going to be the only support that happens and holds, but 179.3 area it's a nice area to watch Apple if it pulls back to that zone. And obviously, if Apple breaks the 181.80, it's at all-time high. So at that point, all the rules are out of the book, just like with NVIDIA. When NVIDIA broke all-time highs, it was literally like buy and hold, or how much higher is it going to keep going? Same thing with Apple. Don't try and play a position based off hope or the idea of, oh, it's Apple. If it breaks all-time high, it's just going to keep running. You have to try and play it smart and use it to your advantage. Wait for a pullback to buy calls. Don't try and predict the high and buy puts. Don't put your emotional stability in that perspective. Like, don't put yourself in that position. Only thing I see with Apple is a pullback to get calls, or just watch it. As the days go throughout the week, Apple may form a pattern or form a nice resistance and or new support. Use those into your perspective when you make the position on it. So I'm switching over to AI stock right now. So higher low before higher high. Yeah, so let me go back to Apple real quick. So it's kind of like this trend just holding still. I mean, obviously the trend's a little bit broken, but focus on the idea of a possible pullback to this trend possibly. It could be anywhere in these areas. There's no exact pinpoint as to where the trend's going to hold, but using the resistance and the reject on these 2 days, the 179.3 area is a nice level to watch. I'm not saying buy calls if it touches. See how Apple reacts to that zone. Going off Wednesday, it rejected the whole day off that level. Then it had a massive sell-off. The very next day, it pushed above it. Friday had a massive sell, held that level, and pushed off it heavy. So 179.3 could be an area to watch. Not saying that's the bounce, but it's a nice area to watch. Make sure the trends stay in the formation they've been in. Watch to see if this trend can hold, the rising wedge, whatever you want to call it. It's all just personal bias. This is what I like to wait for. If you want to play the breakout, be my guest, but I just don't recommend it. So now we're looking at AI. I'm going to keep this short as well because the hype right now is artificial intelligence with NVIDIA and AMD having massive pushes. The earnings report with NVIDIA, AI going off just the main zones on the 4-hour. We have a nice support right here. If you guys have any questions as I just put these levels in, please say something, but I'm trying to make it a visual, like a nice visual to see what I'm actually, like why I'm putting it there, I guess you can say. Because we had a double top, broke out above that, obviously pulled back under. Now we're going to try and contest down the pullback for support. So that area is roughly around about $29.50 a share, $30 a share, around that area for support. And I'll make this line blue just so it stands out along with the highlight being blue. And now the resistance, it's hard just to say, oh, like $47 is the resistance, but where is the resistance before that actually approaches? There's always like steps. It's like a level system. So just going off the previous high right here, we can put a level for another resistance at roughly $35.20 a share, roughly around there. I'll make this orange just so it follows like a positive and negative perspective. I'm going to switch to the daily now just to see if these two levels I put in correlate in any way going back to historical. That $35 a share had a nice rejection right here. So we know historically this level has a reason to be there. It's not a pinpoint 0.28, just anywhere in this area, we have rejections. And going off the recent time frames, we saw it reject right here. when it had that massive push and then the massive pullback. If we go farther back, there's nothing left. So that's basically the main area, and that's kind of like a huge consolidation zone between that $30 a share and $35 a share before the breakdown happened. And now we're currently trying to contest those areas again. So the main support I see on AI is going to be roughly $29.70, if not $30 a share. And then the resistance, the first level of resistance that I see is roughly $35 a share. Don't leave out the idea of that $47, but also the consolidation the day after around this area right here. So main support, roughly $30 a share. Main resistance, roughly $34 a share. Can you do levels on spot? Yeah, I'll do. Like what CJ just said, I usually save SPY for last because a lot of people like to actually talk more about the overall market compared to just individual stocks. But SPY will be done, I promise, because we got 30 minutes left and I've gone through 4. Okay, AMD, just like always. So this rising wedge, look at the idea of the rejection. We rejected, finally broke out. When there's rejections, that means it's going to hold this support. So watch. I understand the idea, like you just put a trend there. How is that going to work with price action? That's just how charting is. Trends, wedges, lower highs, higher highs, whatever you're focused on. When one breaks and it pulls back inside, or it breaks downside and pushes back up, it respects those levels. So AMD is going to have a nice hold off that zone, roughly around 115 a share possibly. It could come lower. There's no guarantee as to where it will be, but if we put a level here at the 115, and I'm going to take away a few of these levels, the 115 and coming back, is there any correlation? And this is the lower side, so we're all right here. Going off the 115 zone I just put in, which is the red on top right here. Let me delete the ones down here so it's not confusing. So when looking at the 115, there's not much like historical dead-on rejection support. It's just in the zones of consolidation. And then we tried to push up here and rejected around that zone. We held here after breaking above. We held that zone as support. Come on, it's not reactive. There we go. So after we broke above, we held that 115 for almost 2 to 3 days straight before pushing back up. So we have a reasoning as to why or how that 115 could play into effect if we have a pullback based off the current price action right now. Can AMD have that pullback? Can it start to curl, maybe form a little cup and handle right here and curl back up? Or could it just have a massive reject and just tank right down to the downside? You always have to focus on the levels and play off of them. Don't just have a level happen and it touches and you're telling yourself, oh, I have to get in. Or, oh, a level touched, I have to sell now in case it keeps going and I'm in puts. You want to focus on the bigger picture. When looking at AMD, we already had the breakout. So could we pull back with chip stocks? Until we break that 115 on the downside, the next major support we're going to have is roughly around the 109 a share. And that's going off the pre-earnings high that kept happening. Earnings pushed it up. That's what broke it out. Or was that NVIDIA's earnings? Yeah, NVIDIA's earnings are what made AMD break out that day. So we're going to be watching that 115 as support. If we can hold that 115 as support, look for the gap fill right back to 130 a share. Until then, if 115 breaks, we're going to be focused on that 109 a share area. And at that point, we're going to be back inside this rising wedge. So I'm switching over to Amazon now. I'm going to start on the daily, and I'm going to have to delete a lot of stuff, it looks like, just so it's not as confusing. So when going off Amazon, we've had a massive push on it. So you don't want to try and just buy calls out of, oh, it has to keep going. I'll just buy calls and hold. Where are the levels at? Where could a nice pullback happen? Is there any possibility that you could see a better entry point for calls? If we're looking at just the basic 4-hour, right at the current price action, I'm going to put a level at roughly 122 a share and leave it white just so we can find it easier. And I'm going to scroll back a few months and or a year or so just to see if that white line has any correlation whatsoever. I'm looking for historical price action that correlates with zones that have held well in the current. And if we're focused on that 122 area. We can see the massive, we have a double top right here, rejection. When we were above that 122 a share, we tried to hold it as support. And also that 125 a share that I also have in orange, it was rejecting this zone right here for about 4 days. Once we broke below that 122, we tried to push back up, couldn't have enough buying pressure to get back above that rejection zone of 122. So we came back down. When we tried to recontest it again, we weren't at the actual 122 a share, but we still did not have buying pressure to get above that zone. And that's why we came back down again. So when using that 122, could that be the support? I'm just trying to find levels underneath the price action and levels above the price action in the current times to use as a guide. It's not just me saying, oh, if 122 contests again, buy calls because it's going to bounce. You want to be prepared and just have a visual. Because if you're on, say, the 5-minute or the 15-minute, you have this level here. What is it doing actually? Like, if you don't understand why it's there, why even have it? Because if you're just looking at the stock for Amazon on the 5-minute like this, you could put this level right here based off these slight smaller day rejections. We held support here, couldn't break this in pre-market, like yada yada. But on the larger picture, why is this level there? Why is that level important? I mean, the 122 basically rejected when Amazon had their earnings. They had that fake pump and then the major reject after the actual report came out. That 122 should play into effect as a major support. If the 122 doesn't hold, focus on the next zone below that played a role as a support. Around 119 a share, below 119, I have 117. Do you guys understand, like, at the speed I'm going, does this make sense to you guys? If you can just say yes or no, or you need more explanations. When I chart, and obviously you guys may do it different, that's that's fine. Whatever you're comfortable with, whatever you have done and it works in your favor. I personally just like to use the larger frames to get the overall picture as to, okay, where is the stock at? In the past, when it's hit these levels, what has it done when it's contested? I'm trying to find the bigger picture because I'm looking for the move. I'm not just looking for like 1 day of a move and then to sell when it moves like 30 cents on the share for Amazon. I want to catch the zone fills, the gap fills. The larger picture is what I'm focused on because then I'm not forcing plays when I'm looking at the 5-minute. Oh, Amazon just double topped here. I'm going to get puts because it looks weak. Is this level historically a rejection or a support? Like, does that play into effect? This 125 area, having that from historical to this day on Friday, it's showing you the rejections. It's playing its part in the current time frames. So I'm switching over to Baba now, and we got about 22 minutes left. I gotta go a little bit faster. So I'm starting on the daily with Baba. And the biggest thing, which I do want to talk about with this, because I have had this conversation with a few other people, you have a double bottom here on Baba. Double bottom, obviously you guys should know that means there's buying pressure, same spot held, which means buyers are present at that exact zone. You see how we broke underneath right here before the massive push up. A lot of the time when this stuff happens, people don't realize, oh my bad, I'm gonna make sure no one's talking too much. So when you're looking at this break or whatever you want to call it, the double bottom broke on the downside. This is literally how the algorithms work on Wall Street for hedge funds, for banks that invest. They know retail is watching this double bottom. They know if we break it below this on the downside, everyone, like, they can see your stop losses. They can see where you're going to sell for a loss because, oh, this double bottom broke on the downside. They see all of this in the algorithm setups on the computers. When the computers know that there's a lot of sellers they're going to activate when it breaks below, they're going to sell this off just to buy it right back up. So I'm always focused on these grabs, these liquidity grabs, these fake outs. It's always breaking a support or faking out above a resistance just to pull back inside. This is how retail gets destroyed every time because they're focused on, oh, if Baba breaks below the previous low right here, I'm going to get out. It breaks below, yes, but it shoots right back up within, what, 4 or 5 days after the break on the downside. The algos know where your stop losses are. They know where retail is basically hiding at the line in case it does break and they're going to get stopped out. Don't let zones affect how you trade. Focus on the idea of, I'm going to wait and see how it holds at this zone and I'll play off of that. Stop loss hunting is a real thing. It is a real thing. I'm not saying like, oh, one person has a stop loss, they're going to get that one person. Basic retail traders all think the same. We all look at patterns, trends, support, resistance, VWAP, whatever it could be. The algos have all, like they know this. If you see a double bottom like this on Baba or any stock, when you see this hold a second time, majority of retail are going to wait and see if it bounces and then chase the play. Even if they buy the bottom, you'll make money on it. The next time it contests that, algos are going to basically drop it down. How many people have that stop loss? How many people are still holding from the previous? They're using that to their advantage because retail plays with emotions. They don't play with setups. They don't play with no fear. Computers don't have fear. So they know what to do when there's enough people in a certain spot. So when this breakdown happened on the downside, it held and pushed right back up. And one of the people that I've been helping for years now, he was waiting for that fake out to happen to get into his position to swing it, only because historically, when you look at this price action, I'm going to switch back to the 4 hour real quick. And I'm going to make the double bottom line purple, and I'm going to make the actual bottom that happened on the liquidity grab, I'm going to make that red. So when going back on the 4 hour, look at how this purple, it wasn't a dead on. Like I said, it's not to the decimal. It's just the idea of, in this area, it's a heavy support. Baba had those supports. Forget about this fake real quick. They had that support. Look at how these have liquidity grabs shoot back up. If we move more forward to the current times, you can see the same thing happen in all these instances. Using that $77 a share or $78 a share, it acted as a resistance, tried to hold support, broke down a few times. That level was already played out historically. That $78 a share area has already been into effect going off the historical movements of Baba. So if we go back to the daily here, you can almost see that playing out on the red. I mean, you see a nasty break on the downside here, but it pushed right back up. We held on a wick, held massive support here, broke down obviously, but once we broke back above it, it was just the purple holding it. People don't look at the past all the way back here. No one's focused on this if they're on the 2 hour or the 4 hour. All they see is this amazing double bottom. So when this happens, if they miss the initial right here, they wait for the next contest, they enter. It takes 3-4 days to happen. If they buy the week of contracts, time's going to eat it up. If you play a month, you can hold if it does fake out. I'm not saying this happens every time, but it's just the idea to think about next time you may start a play based off a double bottom, maybe a double top for puts. Focus on, let's wait and see how this moves in the next few minutes. Don't focus on, oh, it touched, I'm going to buy in because historically it's bounced. Or, oh, it touched, this has to work again. See how the stock reacts. If you look at how Baba's moved when it's contested this stuff, it doesn't move right away. It takes a few days to get that momentum. Wait and see if the buying pressure increases. Wait to see if the trends hold. Wait to see if it actually has that push with buyers. There's no rush when starting a position. The best setup possible, one trade a week, that's all you need. So don't force trades based off, oh, it's back at the same area, let's buy in. Wait and see how it forms. So going off Baba now, rejection I have roughly around $86 to $87. The gap fill that I've been watching for Baba has been the push back up to roughly just under $100. There's a lot of consolidation in this area for Baba right here. A lot of up, down, no massive holds, no massive rejections. It's just a gap from 87 to 96 a share, basically. So I'm trying to see if Baba can hold these supports like it has historically in these areas right here, and it pushes back up for a massive squeeze, basically. So Baba, I'm going to be watching this week to see if we have one more pullback in it to hold that roughly $80 a share support. And if that $80 can hold, at that point, I'm just focused on this bearish trend flipping to bullish. I want to see if we can get higher highs and then pull back to make higher lows. So can we get something like this going on Baba? Can we get that formation going? It's a time consuming, you're waiting. There's no forced play for stuff like this. So I'm switching over to Coinbase now, and I'm going to keep saying this. So if you get annoyed, I apologize. I'm going to start on the larger frames to get a better perspective. Coin has been zoning. I'm going to keep these same 3 lines I have. The main support that I've had on Coin for the last, I don't know how many months now, if not a year, is around $53 a share. The first resistance that I have is roughly $75 a share. And the breakout level that I would love to see happen is around $85 a share. Coin has been consolidating for literally basically a year now, since May of 2022. It has not had that breakout or break down. Every time it breaks down or breaks up, it just pulls right back inside. Had nice support, push back up, hit that $85 share, rejected, hit that $53 support, push back up, and now we're just zoning again. So Coin is all about waiting. Set alerts at $55 a share, so when it pulls back down, you can start to look at it when it gets to that $53 a share area. Coin follows crypto, right? That is correct. I mean, not 100%, but Coin, Mara, Riot, those tend to follow Bitcoin and overall crypto market. If Bitcoin pushes heavy over the weekend, Coin, Mara, and Riot are usually up pre-market. So yes, that is true, but don't use that as a, oh, Bitcoin's running, I'm going to buy Coin calls. It's not always 100% the same. And if you correlate the 2 charts, you'll see that. But in retrospect, that is correct. Crypto does have correlation with Coin. Looking at Coin, I'm just going to be waiting to see if we can hold that support again at roughly $53 a share. If you're looking at a little bit closer zoom on Coin, we held a massive support that could be a higher low right here. Compared to the actual support I had at roughly 53 a share, we could hold at 57 a share and keep that support going. Until we actually hit 75 a share, I'm not going to be interested to get puts on this. I don't want to just force a play like, oh, we're at this area that we've rejected a lot right here. I'm going to buy puts. I don't want to get faked out or a squeeze happen and this pushes on the upside. I'm either waiting for $75 to see what happens, or I'm waiting for $53 to see what happens. I'm not playing this in the middle. The larger frames, I don't like it. If you go down to the smaller frames, you can't see anything I was just talking about. You have no perspective on this. All you see here is this is going to push higher. I'm focused on the larger frames, the bigger picture with what's happening. So I'm switching over to Costco now. I'm going to keep my triangle here with lower highs, higher lows. Costco has finally tried to have that next leg up and push on the upside. When looking at it, I have a support at $5.10 a share. I have another support, which is the heavier one at roughly $500 a share, which is also the psychological number. When I form my resistance points on a break like this setup, whether you call this a symmetrical triangle, squeezing wedge, whatever you want to call it, sideways, I'm using the previous lower highs as my resistance points. That's how I use my gap fills. I'm looking at the previous lower highs, and that is my gaps. So when using resistance, I'm focused on 526 a share. And then for like the breakout level, you can say is the $541 a share. Outside of these 4 levels, I'm not interested in Costco. I don't trade it very often, but this is a stock that you should be watching only because if this momentum picks up, this could be one of those runners that may just keep going days back to back like it has in the previous like this, when it just has a massive run that you just have to hold and add time to a contract. So if the 510 support can hold, this could make that gap fill to 526. If we break through the 510 on the downside, watch the 500 level to hold as support. If 500 breaks, that's when I just use the higher lows as my support at that point. I work my way down. So this will be like the major gap fill if we break on the downside for Costco, which that is roughly about $480 a share or so. Outside of these levels, there's not much more to talk about. Just focus on 510 and then 526 for support and resistance in the current channel. So now I'm switching over to ENPH. For those of you that may not know, this is in the energy sector, which is XLE. When looking at ENPH, we had this massive gap down There's a lot of levels here. Let me delete some of these. So when looking at EMPH, we had this massive gap down right here. So this is basically the gap fill that we have pushing to the upside. On the way to fill this gap, though, this is when you have to look at resistance or supports, what's going to hold, what's going to break on the upside, what do I have to watch out for? We're currently at the first rejection, which basically happened on, I want to say that was Thursday. That was Friday open, around $188 a share. We had that first rejection. If we do reject and pull back, this is when people are very skeptical on the idea of like, I want to get puts because we rejected. Well, if you look at the larger frames, where could there be a nice support to buy calls if it does pull back the way it could? So when looking at EMPH, we rejected the resistance based off this level right here, which I think you guys are starting to get the idea. It's not a pinpoint. It's just the overall area that historical candles have bounced around in that area to hold either support or reject as resistance. So if you use like a rejection zone, you can use this right here as well. It's not a pinpoint. It's just the area has shown weakness and buying pressure. There's more selling pressure than buying pressure. So we're using that as the zones in the current price action. As EMPH is pulling back, where could we hold as a support? If I put a level at roughly, let's say $174, and I'm going to delete these two down here since those are pretty low down. I'm going to switch over to the daily chart, and I'm going to go back and look to see if 174 has held or shown correlation historically. If you guys are starting to get the bigger picture with this stuff, you should see what I am looking at right now. Look at these rejections. I'm going to make this red so it looks better. Look at the rejections we had at 174. The price action is respecting. The 174 is being respected. Rejected. Held support right here. You see how like these levels aren't just in the current times. If you go back, half the time if you find a major level, it's going to show correlation with something. It has a purpose. It has a meaning. It's not just someone puts a level and it's like, I'm going to watch to see what happens. Every level that I put historically has had correlation with a rejection or a support. And when you see all this with the 174 area, it's held support when price action is above. When price action is below, it rejects. If you look at the 189 area where I put for a resistance, that could be the gap fill or the first resistance on EMPH. Look how many rejections that has had when contesting. Is this, hopefully this is opening your eyes possibly, or at least showing you another way to chart moving forward, basically. The main two levels that I see with ENPH, rejection of that 190 a share, and then the biggest support that I see is roughly 174 to 175 a share. If we get a pullback to 174 to 175, watch to see how it reacts and possibly look for a call entry. 175 seems like a psych level too. Yeah, I mean, 175 is a psychological number. 150, 175, 200, 225. Those are also used possibly if it has correlation based off the chart as well. So for me, I'd look for a dip to 175 area to get calls. Watch that rejection if it keeps pushing upside around 190 a share. So I'm switching over to Google now. I'm going to stay on the daily for this one because there's not much to talk about. It's going to be a pretty quick two main zones. And I think you guys should be starting to get the bigger picture on this now. So looking at Google, look how we held heavy support in this area. If we pull that over, oh my gosh, look, current price action rejecting. Historical support is now acting as current resistance. If we're looking for a pullback on Google, we're using the same strategy. Look at a level historically that's either held or rejected. We're using basically the same bull flag or whatever you want to call this where we're at right now at roughly 122 a share. The rejection is roughly around 126, which is basically where we're currently at. So if you guys want a higher level outside of 126, we go back around here and we look for another level. We had a massive bounce right here. Out of this whole area, Google bounced in this one spot on the bottom. So if we pull this over, we can use this area and we can find another either rejection or support hold. We had a nice dip right here that held off a candle. Once we broke underneath, we try to push back up and rejected. So we have reasoning as to why a level could or could not be here. It gives us a standpoint to put something. So roughly around 131 a share, we can put a rejection zone, and I'll make that orange. I'm going to delete this and go back to the current times on the 4-hour. So looking at Google, obviously the main channel support is roughly 122 to 123 a share. When looking at a breakout level, the 126 is going to be there. And let me make that yellow. And then the gap fill, if we break upside, I see is 131 a share. I'll switch back to the daily just so you can see that on a bigger picture now. So we have 131 is the main tap out area if we break upside. If we break 131, could we fill this gap to the upside? I'm not saying we will, but could we? That could be a question to keep, and just for precaution, I'm going to keep that there just to see. So first resistance, we have 126 area to 127 a share. Main support we want to see hold on any dips is roughly 122 to 123 a share on Google. If that level does break, watch the support hold at roughly around 120 a share, I would say. So there's your two supports, first resistance and the gap fill to 131. Okay, so LEU, I've never looked at before, so this is basically me going off first instinct. I'm going to be on the daily because I've never looked at this before. The weekly, none of that back there matters because the stock split. So we're focused on rejection right here. Pulling that all the way over. Does it have correlation where it's at right now? It's basically holding as support. So historical rejection is acting as support for this stock right now. So I'm going to put a level roughly around about 28.2 area. And then we need a resistance for current price action. When looking at this stock, where could we put a level for current area? Once we broke above, we had a nice pullback right here that held support. And as we came out throughout this movement, held support here when we came down. Now we're basically rejecting that with the high wicks on the upside. So I'm going to make this orange, make the bottom blue. And I'm going to switch back to the 4-hour. There's not much volume on this stock, and I can tell just by the way the pre-market and after hours are looking with the gaps. There's not a lot of volume at all, honestly. So keep this simple. Main support I see is roughly $28 a share. Main resistance can be anywhere from, I'd say, $31.50 up to $32.80. So there's a nice gap area. If you just want the major resistance, I would keep it around $32.60 a share. So those are the two main levels for this one. Switching over to McDonald's, I'm going to start on the daily. Just so you guys know, McDonald's is at all-time highs, not currently, but it's pushing back up to all-time highs. The massive pullback we had did not hit the main support based off the historical all-time high before we had that breakout. So we held above, which makes that bounce the new support. That's what that is. This is the first support that has to break before anything new happens. I made that too long. There we go. So we have that support. There's not much to chart with McDonald's since the only price action historically we've had in this area is literally where this highlight is and above. So when using McDonald's now, it's just all-time highs resistance. We had a lot of consolidation around this area right here. So it's literally in the middle of this zone between 282 a share. And then the main resistance before the all-time high is going to be roughly 292 a share. And I'm going to change the colors just to make it look a little bit better. So going with McDonald's, I would not try and catch anything right now. I'd wait to see if we have a pullback. Maybe we can form a trend line or anything that can give us more conviction to start a play. You just want to see something form to have more conviction on your entry. Buying calls is literally saying, oh, we've pushed for 2 days straight. I'm going to get calls because we're going to keep going. You don't want to just hope for a play. You want to enter off solid setups, whether it's support or resistance, and use that to your favor for low risk, high reward. So main support, 282 a share. First resistance, 292 a share. The main breakout, aka all-time high, is going to be roughly 297 a share. So I'm switching over to Meta now. I'm going to start on the daily because for those of you that may not know, we're currently filling the gap to the upside. which for Meta, that's roughly about $290 a share. Pulling this back, you can see the rejections that have happened before with that area. Meta right now is literally zoning. I'm not going to say what you should do or what I think you should do. The main entry was before the breakout. We're literally in no man's land going off that gap fill. There's nothing but consolidation in between. So there's no solid levels to put. The only levels we can do is the orange and this white highlight on top, which is like the gap from support into the resistance. So when using just these two main levels, this is going to be a short explanation. I apologize for that, but I don't want to talk too much on setups that just don't have any interest or a solid setup, I would say. This is literally, let's see if the gap fills. If you want to get calls, you just have to hold basically. There's no conviction as to where to enter. If you want to use this little pullback, you can for support, or use the previous higher lowest support. That's when it comes into your personal opinion. The main support I see is 248 a share, and then the gap fill, aka the first resistance, is going to be roughly $290 a share on Meta. So I'm switching over to MU now. For those of you that may not know what MU is, they are also a semiconductor along with AMD and NVIDIA. They broke out of a huge channel that I've been watching for I don't know how many months, if even probably a year, to be honest. And that was this basically rejection that, there we go, this rejection that kept happening at roughly $64.50 a share. MU is currently in the same heavy consolidation as it always is historically. So if you're looking for a play for MU, me personally, I would wait for a pullback to roughly $65 a share. I don't think you should risk entering right now. I would wait for a better setup, because if MU doesn't align better, there's hundreds of other stocks you can watch. Don't limit your possibilities to one stock that you just want to catch. Find something better and take the weight off your shoulders of just waiting for, I want to make money so bad. Find a stock where you can tell yourself, I love this setup, win or lose, this entry, I would not be upset if I do lose on it. Find something that you are emotionally stable with, where you're not going to freak out if you're wrong right away. You're accepting the results before even entering the trade. So the main support I would wait to see is a $65.50 a share. The gap fill on the top is going to be roughly $74 to $75 a share, which was also that push that it had on the upside. CJ says setting alerts to those levels helps. Yeah, so I'm going to briefly explain that right now. If you guys don't use alerts for price action, I would highly recommend it. Literally, if I just told you, okay, $65.50 is a heavy support level, watch it when it gets close to there. Set an alert for like $66 a share or $66.50. That way, when the stock pulls down, oh my gosh, come on. That way, when the stock pulls down to that alert, you get alerted. Now you can start watching when the stock's down here. You don't have to watch it when the stock's up here. Set alerts, and then that will grab your attention to come back and watch the stock. Until then, there's no point in watching it. I want to see a rejection at $75 a share, or I want to see a support hold at $65.50 a share. Anywhere in between, I'm not interested. So I'm switching over to NEO now. I'm going to start on the daily, which I think this is at all-time lows, I want to say. It is not, but it's basically approaching there. So going off the weekly first, I just want to put a level right here because I don't know if this could play a role in the current time frames, but I'm liking how it was rejecting on the weekly right here. It also held support when it first IPO'd. So using that white line, I'm going to go back to the 4-hour now and see where it correlates with the current time frames. That white line is about $2 lower. So that is invalid. It does not matter, but I'll keep it there. So using NEO in the current times, I'm looking for a support or just anything I can use in my favor. The previous lower low in this standpoint is in this area right now. So if we can hold support here and start to curl on NEO, this is when I personally will wait to see, okay, can we break higher highs and then pull back to make a higher low? Setups like this, I'll let you get out here. Setups like these, I'm looking for new trends to form. I'm looking for a bull trend. We're currently in a bearish trend. lower lows, lower highs. I want to see a reversal to grab my attention. Until then, I'm not interested in NEO. Could it hold support here and push higher on the upside? Yes. But do you want to risk a hopeful play of this could be the low support? It could start bouncing here. Watch to see how it reacts with the rejection area at roughly $80.85 a share, roughly around there. The support right now, if this holds, is roughly $7.30 a share, basically. So outside of these two levels, I'm not really interested in seeing what it does in between. Main support, $7.30. Main resistance, $8.85. So I'm switching to PayPal now. I feel like there wasn't as much as I thought there was. So I'm going to the daily first for PayPal. I'm actually going to switch to the weekly because I can't see all the way back. So I'm going to delete these lines off PayPal just so they're a little bit out. Okay, so when looking at the current time for PayPal, I'm going to put a line here just so you guys can see how I do this. There is no, there's nothing to look at where I put that low in the current times to historical. So it's all invalid, which for me, this is the main zone I see, roughly $70 a share area. See how it held that support? Once it held above that, it never came back down. And when it did, buyers stepped in before it could even come close. So now that we are below that area, we held support here for basically 2 months straight, finally broke on the downside. At this point, PayPal could start curling. So as this is curling, I'm looking for a trend reversal. We were in bearish, now we're looking for bullish. Can we hold these trends and push back up to that $71, which is now going to act as a resistance? It's not support anymore, it's now resistance. Along with using that, focus on the hold, not the liquidity grab here. Focus on the previous that it came below, shot right back up. I gotta delete this. So at this point, it's all seeing, can a bullish trend hold? There's no prediction as to where the low is going to be on PayPal, but this could be the low and it could just keep pumping. Do you want to buy that if it just keeps going? Or do you want to wait to see if this can have a slight pullback, maybe hold support around here for a day or two and then push up higher? This is when patience comes into play. Having your emotions off to the side and letting the chart form and give you the play. So there's not much to talk about with PayPal. The gap fill I want to see happen is $71 a share, back to the heavy historical support, which is now resistance. The main support that I like to see hold is roughly $60 a share on the downside if we have a pullback. So outside of these two levels, there's not much to look at. PayPal has to hold higher lows to get a new trend forming. We need trends to go on the upside. So I'm switching over to Roblox now. I'm going to start on the daily like I've said every time, which is probably getting annoying. PayPal is still zoning. Last week when I charted Roblox. Last week when I charted Roblox, we had a level at $41, roughly $42. Main support at roughly $38. We are still in this same zone. So just like every other week, when a stock doesn't break out of the levels I put in the week before, I keep everything the same. Roblox tried to break out on the upside of the resistance, not enough buying pressure, came right back down. So at this point, I want to see if it can hold that $38 a share as a support. If that can't hold, we have the next lower low, which is going to be $36 a share. And then below that, obviously $33 a share. Outside of these four levels, aka the main two, resistance being roughly $42 a share and the main support being $38 a share, there's not much to look at with Roblox right now. This is just waiting to see what the chart does and letting the time play itself out. So now I am on Tesla. Tesla is currently at a rejection zone. If you're looking at the support that held right here, use that moving forward, tried to hold again, but failed. Once we broke back to that historical support and now acts as a resistance. I'm not saying Tesla's going to reject. Tesla is very strong. Tech is strong. I don't see why this won't break out. It's just time, patience. Don't rush calls thinking, oh, it's going to go. It could have a slight pullback, maybe hold around this area, and then send right back up to the upside. So don't think you have to play Tesla right away to catch the move. There could be a better entry, but if you add time to your play, you can buy at the top and hold on a dip and then it pushes back up. You just want to be smart though. The zone I would like to see a pullback happen on Tesla is roughly $200 a share. That is a massive drop. I get that. So if you want a closer support, watch the $208 a share area. So I'll leave both those levels there just for a visual perspective. First support, roughly $208 a share. The main support that I want to see hold is roughly $200 a share. Tesla needs to break 218 a share. 218 is going to be massive. That has to break for more upside continuation. If 218 a share breaks on the upside, we will see a gap to roughly 235 to 240 a share. If we keep pushing on Tesla, the main gap fill is right here, roughly 315. That would be the main fill. Not saying it's going to happen. I'm just giving you the chart perspective on what it's saying. So first main rejection on Tesla, 218 a share has to break. Main support is 200 a share, but if you want a closer support, you can use 208 a share for Tesla. So now I am on ULTA, Alta Beauty. I've never charted this, never looked at it. So let's just go to the weekly and see what's going on with it. Looks like the S&P a little bit. So just going off of this, I am liking how these trends are working. Yes, we're below. We've seen historically it breaks below and it shoots back up. If you just want to chart the wicks like this, it's all invalid. You're literally saying, oh, it has to bounce because it has on these two candles. Get the overall zone when doing trends. Make sure the trends hit the overall zones. So we are currently underneath the trend. Can we at least recontest this top side? That's what you should focus on when you do trends. If we switch to the daily now, look at how the main support for this stock was anywhere in this area. Every time it came down, yes, we wicked below a few times. I get that. But you're focused on the overall area of where it came down, pushed up, came down, pushed up. And that's around that $370 a share area. It never came down to that level. So could this have more downside in it? Could it push higher? Could it push back to all-time highs? We don't know. I like to call this a zone. It's zoning. It's in no man's land. I don't even want to look at a stock like this until I have more moves after this gap down happened. Currently, it's just there, if that makes sense to everybody. I don't want to speak too much on it because there's not enough evidence or chart setups for me to say anything. But if you want a main support, I would like to see it pull back to roughly 375 to 380 a share. And as a nice resistance, if we do push from here, we kind of use, oh shoot, that didn't move. There we go. We can kind of use this area that had a nice rejection. And then once we broke above and had a push, we pulled back and held this support. And that's roughly $436 a share. So we need more of the chart to form here before making an informed decision. So this is one thing I like to say before I say how I feel. Everything I'm saying is biased. It's all personal opinion based off how I trade, how I like to wait for setups. I personally, when looking at the daily, if you go to the 30-minute, you have enough stuff to do whatever with this. I mean, you can say we have a support right here. We have a gap fill to up here basically. So we're going to push up at least another $10. What I focus on is the bigger picture. When looking at the 4-hour or even the daily chart, you don't have enough like conclusions to make a decision. There's no evidence as to what's going to happen next. So you're basically saying this could push, I'm going to buy calls, or this hasn't finished dropping lower, I'm going to buy puts because it has to go lower. I don't want to speak on what I think is going to happen. I want to speak on what the chart is telling me, which is going to limit my decisions and limit my trades I force without having conviction. I see no smart setup right now with this stock. If you're right, you're right. But from my personal perspective, I would not look at something like this right now. I'd wait a few days, maybe a week for something more to happen. We just had that massive gap down from the earnings. I don't want to force a trade on this. Plus, there's better stuff to look at. Apple's close to all-time highs. Amazon's been running. Tesla could break out. There's a lot more options other than just this one stock. So I'm going to go back, not go back, but I'm going to go to SPY now, and this is going to be the ending point. So as I'm talking about what I think is going to happen with SPY this week, you guys can drop more questions or just drop anything you feel that you want me to answer for you. So I'll briefly talk about this. I know Rippy guy's gonna drop his analysis on S&P and or the S&P and the SPY setup and everything. So I don't want to speak too much on what I think is going to happen. But last week when we talked about SPY, I told you guys I was watching that 430 a share area to basically fill the gap. And we're basically approaching that at the moment. We easily broke out of that 422 a share, which I said if we break out, 430 is coming. And we're just on the break of 430. And if 430 breaks, I would not be surprised if we touch $440 on SPY. Not saying it's going to happen. I'm just saying that's going to be the gap fill if 430 breaks this week or next week or the week after. So if you're looking for an entry for calls on SPY on a pullback, it's going to be a tough one right now because we're breaking out. Like we're in a, I don't want to say bull market, but a current bull sentiment we are in right now. A pullback to 422 would be nice, but that is a $6 drop, which would be a decent amount to say the least. So when looking at SPY, it's kind of like an indecisive. Could it go higher? Could it come lower? It's going to be a play in the moment or to see how it opens up tomorrow and or futures overnight. Pre-market will be a huge indication as to what's going to happen. And obviously we closed in a practical bull flag. A pullback to 422 is what I would like to see. And then a reject of 430 could be in play. 430 could also break on the upside. So those are the two main levels I have. Main support at 422. The main resistance at 430. With the debt ceiling moving along, isn't that bullish for S&P? So logically, yes, but this could be a good like throwback on the way you said earlier. Was the news played in already? I feel like everyone knew they were going to sign the debt ceiling to make it higher. I feel everyone knew that. SPY's been, I mean, the whole market's been played into that. I honestly think everyone was just expecting the ceiling to be raised. And that's why we've been pushing. And let me see if I can post this in the Discord real quick. Or actually, I posted this in some of you guys don't have access. Let me switch it to the Academy discussion section. I'm going to find this picture. The last time the debt ceiling was raised, the drop on the market did not happen until after the signing. So it's kind of like, I'm not saying that history is going to repeat itself, but it's kind of on the verge of like, could something happen like it has in the past where the market was played in? I feel like they knew, and we knew as retail, they have to raise the debt ceiling. If they don't do it, what could happen to our economy? So that was already like in the air. I just posted the picture in the Academy discussion. If you guys want to go look at it, the last time the debt ceiling was passed, the drop off happened after it was confirmed the signing had happened. Not saying that's going to be the same result, but it's something to keep into your like thought process. Let a dip happen if it does sell off. If it keeps going higher, maybe wait for a nice day trade to scalp a call, but don't anticipate a massive move either way. You have to play the levels and just do what the chart's telling you. So do you guys have any questions, any statements, good or bad reviews over how I did tonight? Anything that you want to tell me, I would greatly appreciate to make this better for you next time we do this. So any feedback would be amazing. And if there is no feedback, hopefully you guys think of something in the next few days. But as always, I appreciate you guys for being here. I hope you learned something. I don't know. I just hope you guys got something out of this. I chart very simple. That's one thing people tell me a lot. I'm very big on let the chart do the work. Don't force anything. Don't hope for anything big. Let the chart come back to levels that are heavy based on historical analysis and play off of those. It makes risk way smaller and your reward is going to be a lot bigger in your favor. Yeah, you guys are welcome.